to Real Leadership, the podcast that cuts through the noise to focus on leaders who make, move, and process things in the real economy. Together, we'll discover the strategies and hard-earned lessons from pragmatic, gutsy leaders who operate in a world that is more steak than it is sizzle. Right here, we dive into their stories, challenges, and triumphs to go beneath the surface to the very heart of leadership in the real economy. I'm your host, Jim Weaver, Chief Operating Officer of the Onan Group, where we believe that real leadership does indeed matter. Let's go.
Understanding your labor market is crucial for successful recruitment. Onan Staffing's Recruitment Strategy Guide provides insights specific to your geographic location and the positions you're hiring for. Our Recruitment Strategy Guide delivers a clear snapshot of your labor market and actionable intel to tackle market-specific challenges. With Onan's expertise, we help you navigate and win in your competitive landscape. Empower your recruiting process with the insights you need. Learn more about Onan's Recruitment Strategy Guide at onanstaffing.com/strategy. All right. In this episode, we're excited to introduce Rocky Fiore from Prairie Capital Advisors. Rocky joined Prairie in 2000, where he is the Managing Director and Chief Operating Officer overseeing project teams, business development, and overall firm strategy. With an MBA from DePaul University, Rocky has extensive experience in M&A and financial advisory roles, including with ABN AMRO and Morgan Stanley. Today, Rocky's sought after for his expertise in employee stock ownership plans, ESOPs. You know, when we launched Real Leadership, our mission was to shine a spotlight on trailblazers in the light industrial manufacturing and logistics sectors. At first glance, Rocky Fiore might appear to diverge from this path. However, his work closely intersects with these industries by providing potentially transformational support and guidance. This is something we've experienced firsthand at Onan. Rocky's expertise was instrumental in Onan's recent shift to becoming an employee-owned company. So, welcome, Rocky.
Thanks, Jim. Pleasure to be here with you today and to all the listeners as well. Thank you.
Yeah, we're happy to have you. You know, this ESOP transition for us has been really exciting, and you guys did such a great job shepherding us through that. And I thought our listeners might be interested to hear about ESOPs, both from a member of an ESOP and then potential business owners thinking about this as a transformational way to foster employee ownership mindset and a really creative way to transition ownership to the very people that built the company. So why don't we start with this, Rocky? What is an ESOP?
Yeah, great. Good question. And we hear a lot of different things about ESOPs, you know, employee stock option programs and things like that. But really, employee stock ownership plan, it's a qualified retirement plan. It's an ownership transition vehicle. Has a lot of different tax efficiencies that are available not only to the company, but also the selling shareholders. And really, where do ESOPs come into play, right? When is somebody even thinking about an ESOP? Where do they apply? And I think you could think about an ESOP as an alternative to any type of other ownership transition, like a sale of the business to a third party. You know, we're all familiar with, somebody who may choose to sell to a competitor, some type of strategic buyers. There's private equity that's always in a conversation these days. So an ESOP can be a competing transaction with those types of transactions and offer different types of outcomes for the seller, obviously for the business themselves, allowing the business to be able to continue operating as is, so to speak, to continue and remain independent, not be owned or controlled by somebody else. And being able to reward its employees. At the end of the day, an ESOP's a retirement plan, and it's there to provide a benefit for the employees, while at the same time, it can provide liquidity in a sale for the owners of the business. So that's, those are attractive features.
Yeah. Talk more about the types of companies that, and actually maybe first, like, tell me more about why an owner would choose that path. Expand on that a little bit more. You touched on a lot, but double click on that.
Yeah, absolutely, Jim. So when you think about who or what type of business might be considering an ESOP or might be a good fit for an ESOP, typically they're more mature businesses. They have a steady cash flow stream. Size is an important factor. There's not it is an important factor. You'd want to have a business and there isn't a hard and fast rule, but if a business has 10 employees, probably not going to be a really good ESOP candidate. If it has 20 employees, maybe an option, probably not an ESOP candidate. But if you're north of 25, certainly north of 50, you can at least have a conversation if it makes sense for the business. And then once certainly you get into 100, 200 plus employees, it can end up being a very meaningful or a serious potential outcome for transitioning ownership. Yeah, and then just as far as types of businesses, really all industries are represented in the ESOP space. You mentioned manufacturing, logistics, distribution, construction, business service type industries, and the list really goes on and on. There isn't really one type of industry that works well for ESOPs. I mean, at the end of the day, you want really just a business that's well-functioning, has a good operating model, has a quality management team, has a predictable level of cash flow, ultimately to be able to support an ESOP transaction.
Yeah. You mentioned being able to keep the leadership structure in place, the business structure in place, and I think maybe that's a misperception that the owners are kind of just giving it to the employees. Talk about the mechanics of that and how all that works.
Yeah, sure. So at the end of the day, most ESOP transactions are leveraged, meaning they take on debt and they borrow money from a bank, and the company has an obligation. So the employees themselves are not putting any of their own money. So employees essentially are beneficiaries of the ESOP. And just like a 401k plan, they are become eligible to be in the plan. So there's eligibility requirements just like a 401k. But what an employee is eligible to be in the plan, there's really no way to keep that individual or any other eligible employee out of the plan. It's very formulaic in terms of how much benefit or how many shares each of those eligible employees receive within the ESOP. We like to call them non-discriminatory plans, meaning there's nothing from an employer standpoint you can do to discriminate against any single employee who would otherwise be eligible in the plan from actually receiving a benefit, which we think is a great thing. They're very democratic in that nature. It's just if you qualify, you're in the plan, you don't put any money, and you actually do receive shares of the sponsoring ESOP company.
Okay. How does the business owner get money out? How is that if they're not buying the shares, then how does the business owner actually get money?
So that's where the loan from the bank typically comes in. So the company itself will borrow money from a bank, then loan it to the ESOP. The ESOP then has the money to buy shares from the seller, right? So now you have the shares that the seller has sold in the ESOP. You have the cash that came in from the bank, right, now in the seller's hands. And now you have the company having an obligation with the bank to repay that loan, right? And over time, when you pay that debt back, you're doing what? You're creating equity value. The shares that are held in the plan are representative of equity value. So by paying down that debt, you are potentially increasing equity value, creating value for the ESOP participants. So if you have a business that's growing and you're paying down debt, you can get some pretty attractive share price increases over time and deliver an extraordinary benefit. By the way, statistically, ESOPs deliver 2 to 3 times more retirement benefit than their non-ESOP counterpart, like a typical 401k plan.
Yeah.
So, and these are, this has been researched and studied by whether it's the National Center for Employee Ownership, the ESOP Association. There are certain universities that have conducted independent research studies. there's a lot of evidence and data to show that ESOPs deliver a significant amount more retirement benefit than non-ESOP companies.
Yeah, I looked at, you've given us modeling to look at, and it's pretty impressive what just a regular employee here with a steady progression in their career and the business having a modest growth rate, what it means in 10, 15, 20 years. It's so exciting just thinking about that for
and
people.
it's not
I wish we had it when I started 23 years ago.
Yeah, but it's never too late to get started, right? It's something now's better than nothing at all.
That's right.
And, it's not a get-rich-quick program. It's meant to provide a meaningful benefit for those that remain loyal and, spend many years at a company, making contributions and being rewarded for those contributions by participating in equity ownership. So it's an incredible thing. And you think about it from a societal standpoint and the incredible wealth gap there is, and it continues to be. It's, in fact, even more exacerbated now than it ever has been with some of the wealth creation that has occurred over the last number of years and even in the baby boomer population and, those that have not been able to become homeowners. And now you're looking at the cost of entry into owning homes and the price of getting a mortgage and things like that. So it's making it even more difficult for people to create wealth, at least younger generation. And so the ESOPs help to at least solve some of that problem. It's not the answer for everything, but I think it's definitely part of the conversation, and it's doing good work. And I actually think it has a lot of legs and momentum, and will continue to help that situation out.
Yeah. What have you seen in terms of the psychological impact on the team over the long term or even the short term? What have you noticed with the companies you've worked with? What's been that kind of impact?
Yeah, it's a bit of a mixed bag, and I think there's sometimes the impression that if a business owner sells to an ESOP, they put this plan in place, and the employees don't have to put any money into it. And if they just stay with the company, they're going to achieve all this potential value down the road. And it's like, hey, what could be better than that? How can you possibly deliver more? They don't have to put $1 of their own money in, but potentially can make tens of thousands or hundreds of thousands, and even in some cases more than that over time. Yeah. And so why wouldn't they all just be thrilled and coming in and kumbaya? And the truth of the matter is ESOPs are unique. They're not all that well known. Most employees that become a participant in an ESOP plan are seeing it, potentially even hearing about it for the very first time. So they have no experience, they have no reference point. They may come in with a certain degree of skepticism. They may feel like there's going to be a bait and switch along the way. Like, hey, this sounds too good to be true, or equity ownership, I don't have any ownership in anything else other than maybe my home or my automobile. This sounds very complex to be an owner of a business. So they don't know what it means. They feel overwhelmed by it. So I would just say, for those that have gone down the ESOP path or are planning on venturing it, or even in yourself, Jim, your situation at Onan, just be respectful of the fact that everybody's coming from a different place. Some people may take more time to kind of get on board with the concepts, to learn about it, to become truly invested in it, and to begin to behave like an owner, or you'd expect an owner to behave. And I can tell you, there's always going to be naysayers. There's always going to be those folks that are going to challenge it. Perhaps they may even be somewhat toxic about it. And but eventually, if you can get those folks to come around, they will in turn become your biggest advocates over time. So your biggest skeptics up front will become your great advocates. So just give it some time, take some time to get there. And hopefully the business is doing the work, right? You've got the internal committees and groups and individuals at every level of the organization that are there learning about it, talking about it, and sharing that knowledge and information, and working from within to make sure people have a place they can go to get information. That's a big part of it.
Recruiting top talent is tough, Onan Staffing focuses on people, offering exceptional benefits to attract and retain dedicated workers. Partner with us for flexible, data-driven solutions. Visit onanstaffing.com to learn more.
So what is your role, I guess, Prairie, and then your role in all this? I know what it is, but for our listeners, what's your role in setting up ESOPs, getting them rolling, consulting?
Yeah, sure. Those? So, Prairie's been in business for over 27 years. We work in this realm of ownership transition advisory. And we do typical M&A sales, right? Private equity and strategic sales. But then we also do ESOPs, which I think is unique for our business in that from a transactional standpoint, we're very agnostic. We don't necessarily care which path you choose to go, other than what's important to us is that you have your options. You understand your options.
Yeah.
And the analysis has been done, the work's been done so that you can make a decision with a clear conscience and say, hey, this makes the most sense for me, my family, my business, and then we're able to support that. From a procedural standpoint, typically evaluating an ESOP is a couple month process. It's sharing a lot of information about the business, certainly financial statements, some other organizational information. But we create a valuation for the business. That's a starting point. What's the value of the company worth? And then we begin to run what we call feasibility models. And that's determining what type of transaction works for the business. Is it a minority transaction where it's 30% of the company will be sold to an ESOP, or 10 or 20%, but potentially 50%, potentially 100%. So any one of those scenarios could potentially be an opportunity. So our job is really to vet out what the alternatives may be and what's available to the business owner. And once you can get that full picture, then you can start to refine it. And then they can begin to select within that which makes the most sense. And again, it could be M&A route, but it could be ESOP route. If it's the ESOP route, then we're probably adding another 4 months onto that timeline. So if you're a couple months doing the analysis and feasibility work, you're probably another 4 months in addition to that, working with the banks, working with trustees, representing the employees, by the way. So it's really an arm's length type transaction.
Yeah. It's not something one is going to do on their own. That's for sure. You need somebody to quarterback it. It's with the right partner, it's totally feasible, and it's been an interesting process, but there are a lot of moving parts. That's for sure.
There are a lot of moving parts. And, I like the word quarterback. We use that word, frequently in just describing our role because there's a lot of players on the field. And our job is to lead the transaction and move it down the football field and, hopefully get it across the goal line if that's ultimately the objective for the business owner. And that's, our job is just to, we like saying, we're herding cats. We're getting everybody, kind of in the position they're supposed to be, providing support wherever is needed, helping to, make sure everybody's on task and doing what they're supposed to do, because there are a lot of things that have to happen in order to get a transaction completed.
Yeah. We've touched on a couple of these, but what are some common misperceptions that business owners have about how an ESOP works or what an ESOP is? What do you run into?
I think some of the things is, the trustee is going to run the business. That's probably one of the biggest things. They feel like if they lose control, this idea of I own more than 50%, so I control the entity. And if I sell more than 50%, I lose control of the entity. I think there's some degree of that, right? If somebody has a controlling interest in the company, ultimately they can do things like elect board of directors that can change the path of the business. But I think from a practical standpoint, an ESOP trustee entering into a transaction, whether it's a minority or a majority ownership of the business, is investing in that business based on the success it has had and the outlook for the business that the management team, the leadership team has laid out for them, right? So the ESOP trustee is going to come in on behalf of employees and learn the business. They're going to say, help me understand why you guys do what you do. Why are you relevant? Why do you compete at the level that you do? And how will you continue to maintain this? The last thing the ESOP trustee would want to do is come in and begin to upend the leadership team and the strategy of the business. Now, of course, there are some safeguards that are in place, right? So if there were bad things happening at the board level or at the management level, the trustee may poke their head and say, hey, what's going on here? But in a general sense, as long as a business is continuing to execute on its strategy, the trustee is there. They're there for eyes and ears for the employees. They're going to stay in touch once or twice a year. They'll get updated financial information. They'll go through the annual valuation process, which is an important part. The business is going to be valued once per year, every year after you become an ESOP, because the employees are going to want to get an account statement. There's a federal mandate that says those employees must receive an account statement that says this is the value of their ESOP account, right? So we're going to update the value of those shares once per year. But that's a big thing, is just control. The other thing is, I think, in employees, the concern that the employees own the company, and therefore they're going to come in and basically tell the management team or the leadership team how the business should be run. This person shouldn't be in that chair, this person. So there's always going to be corporate governance, leadership, management, right, and on, just the way any good business would operate. And that doesn't change when you go down the path of an ESOP.
Yeah. Okay. When do these programs, a company that goes through with an ESOP, if they're going to fail or not work out well, what's the setup for an ESOP kind of flopping in your experience?
Yeah, so we like to say that if you have a bad company and you put an ESOP in, you have a bad company with an ESOP. So the ESOP is not an operational vehicle. It doesn't solve your strategic challenges. In the most ideal circumstance, an ESOP may make the employee group more productive. It may help the employees be more engaged in the business. That may result in less turnover. Right, all of those things could be a net positive to the ESOP and to the company, but at the end of the day, it doesn't help the business run well. And so if the business is struggling from a strategic or an execution standpoint, or it's losing its competitive advantage, if the ESOP transaction just occurred and there's debt on the balance sheet, there could be, challenges. That could be something that, becomes an issue with the bank. It could be restructuring debt at that point. Thankfully, we've seen very, very few circumstances of, a company becoming insolvent or having to go down the path of bankruptcy or just winding down operations. But a lot of times, again, it's not the ESOP's fault. It's more of just the business was not able to stay ahead of its competition. And, as you say, if you're not growing, you're dying. And so, it's really incumbent upon the management team, the leadership team to execute on the business strategy and make sure they're doing the things that are necessary to continue to remain relevant as a business.
Yeah. Why do your customers pick you over the competitors? Why do you think they go with you? There's a lot of things there. I think, we have an incredible history. We have an incredible client base that we can look back to and draw our experiences from. I think we really take the time to be patient and understanding up front. We're not really in a business although we're in a transaction advisory business, we never behave like we're just trying to get somebody to do a transaction. We really take the time to understand what the motivations are, what's driving them to make a decision, really laying out the options, and always being patient and thinking about the client first and any of the advice and decision making that we're kind of involved in helping them get to a point where, hey, I need to do this, that, or the other thing. So I think our patience is a big part of it. Our team environment. We have a typically 3-4 people on any engagement team. We always encourage the client to get to know everybody on their team. Many of our clients are going to conferences that we attend. We are sending many of our professionals. We encourage our clients and even our professionals to get out and visit with our clients. So we really try and institutionalize the relationship. We try and make it more about our business as a whole and our philosophy than it is about just any one person and their ideas. Obviously, we're a people business. That's important. It's critical. We have to have smart people. We have to have highly engaged people that are developing those relationships.
But institutionally, we try to provide a lot of additional value. And we do things like webinars. You may have seen some of the webinars that we host almost on a monthly basis, and they're free for any of our clients or prospects or business partners to join. And they can consume some of our information. They can get some of our education materials in a non-threatening way. They don't have to sit down and meet with us face to face. They don't have to fly out and go somewhere or us fly out. They can just sit back, the comfort of their own home or office, and consume some of the information that we have to share, and they can follow up as they see fit.
Yeah. Let's pivot to your leadership a little bit. Not only are you an ESOP expert, but you're a leader. It's NFL playoff time right now, and before we started rolling, we were talking about the Detroit Lions and Dan Campbell. Unfortunately, they lost to the San Francisco 49ers, but that team had quite a turnaround. And, since Dan Campbell took over, what do you think is going on there?
I've just been so fascinated with what's happened in Detroit, and I've been so impressed with what Dan has been able to do and accomplish in the time he's been there. He came in as head coach in, I believe it was the beginning of 2021. Like, they hired him in January of 2021. And Detroit was always kind of the bottom feeder in their division. And with the Green Bay Packers and Minnesota Vikings, and it was, and I'm a Chicago Bear fan, unfortunately, but it was between Chicago and Detroit. It seemed like we were always kind of sitting at the bottom of the division, and they were never really taken too seriously. And in 2020, I believe they came off of a 5-11 season, and Dan had come in January of 2021, and the first season he took over, they were 3-13-1. So they actually took a step back, and that was in 2021. In 2022, they started the season 1-6. So, and he was on a hot seat. There was a lot of chatter about Dan Campbell he was on a hot seat, and he was going to lose his job as head coach. And something clicked. I don't know exactly what it was, but the team ended up winning 8 of their last 10 games. Their season finale was against the Green Bay Packers in Green Bay. They won that game, and they knocked the Packers out of the playoff in doing so. Yeah. And they had a winning season, finishing 9-8. Okay, and now they come back this year, and they kind of, like, the rest is history, right? They have this incredible season. I don't know what they finished, 13-5 or 12-5, I think, was their final record. And then they win, I think so, against the Rams in the wild card round 1 of the playoffs. And then the second round, they played, I believe, Tampa Bay, and they beat them. And, anybody that watched the game on Sunday night against San Francisco, they probably should have won that game. It was a comedy of unlikely occurrences that had happened in the second half. Some might criticize Dan for some of the play calling. There's a lot of comments about, hey, should have taken the points, should have taken field goals or whatever, given the circumstance. And in hindsight, and he's admitted to this, hey, I'm going to be criticized for that, and that's part of the gig. But the truth of the matter is, and what I appreciate about him and that whole leadership style, is he remained authentic. He remained true to form. He's been a risk taker. He had taken more fourth down chances going for it on fourth down than any other team this entire year. So given that they were playing for a chance to get to the Super Bowl, and it would have been the only time in Detroit's entire history as an organization of ever going to the Super Bowl. So with everything on the line, he did exactly what he'd always done, and he was willing to take the risk. So I think from a leadership standpoint, that consistency, that reliability, that predictability from his team standpoint is saying, hey, this is the same guy we've gotten to know. When the pressure was on, he didn't crumble. He didn't start making different types of decisions based on what's always made us successful. Now, he could have, had that gone a different way, had made one of those first downs, or had some of the other funny plays not played out the way they did, this conversation would be entirely different, or at least people's view of Dan and how he was coaching during that game might be totally different. But, if you go back from the very beginning, when Dan interviewed for the job, the first words he said in the interview were, "I want this job." Those were the first words that came out, and he did it over Zoom in his first meeting. And so it left a very big impression on the organization because he had a history there. He played in the town. He was a tight end there. He knew the organization. He knew the ownership. He knew the fan base. And so when he went into that interview, he said, "This is the job for me. We're about ready to make a change. I feel it coming." Like, he said all those things. So I just think it's very cool.
Yeah. So how do you think about when it's time to pivot? You know, in retrospect, Dan, it's funny. We have a guy from Detroit, one of our VPs here. I met with him first thing Monday morning. You know, we had to start with the football conversation. He was like, he should have kicked the field goals. When do you think about? I'm with you on sticking to your guns and staying true. And when is the right time to pivot? Do you think? How do you think?
So
about that?
I've thought a lot about that game and kind of like what I would have done in that situation. And I would just say the only thing I might have thought differently about is just that whole idea of situational awareness, right? So, sure, he had taken more fourth down tries than anybody else in the league going into that situation. But were they all at the same level? Were they in a fourth quarter? Were they with a chance to tie the game? Were they at a point where they had a makeable field goal, right? So there are circumstances there where he said, is this, you might have stopped or paused and said, is this a risk too big to be taken given the situation and given the opportunity we have, right? What's the opportunity cost now, right? We're missing a chance to potentially tie this game, put our defense on the field, which in the first half, they looked outstanding. So, but that's in business too, right? You make decisions every day. Things come at you from all different directions, and a decision you may make in one type of situation may be different in another. And again, it's just being aware of what the environment and what's at stake.
Facing sudden growth or limited by traditional financing? Momentum Capital Funding empowers businesses with real-time cash flow through AR factoring. Get the funding you need and fuel your success. Visit MomentumCapitalFunding.com to learn more.
You've been at it for a while, like me, business-wise, leadership-wise. So how has your approach to leadership changed over the years? How are you different than you were 15, 20 years ago in terms of your approach?
Well, I would say 15, 20 years ago, first of all, Prairie was a lot smaller of a place than we are now. We have 7, 8 offices. We have so many incredible professionals that contribute in so many different ways. We have different service lines and businesses. So, 15, 20 years ago, we were a lot smaller. I was a lot more hands-on in a lot of things that I was doing. And I think in today's world, I'm relying so much more on the team. I'm providing so much support for them. I'm really looking at them and trying to figure out, hey, you've got such incredibly talented individuals. How do you allow them an opportunity to do the best work that they can do? How do you allow them to contribute in the greatest way that they're able to and to reach the potential goals that they have, right? So a lot of the time is really spent trying to understand the individuals, helping them conquer the battles and the challenges that they're facing. So it's just more the perspective is different. It's just it's less about me and what I'm doing and more about them and what they're doing and what I can do to be able to support that.
Yeah. How has the interest rate environment affected M&A, ESOPs? What do you see over the next few years? Because you've been around long enough to have been in a higher interest rate environment, and then we've had, 15 years of really cheap money, at least, right? And now we're back to we have to think about debt. How have you seen things change, and what do you think is coming over the next 5 years?
Yeah, it's been surprisingly very good. The market continues to be extremely resilient. And what we hear on the street is, the transactional environment continues to remain pretty healthy. Now, obviously, private equity, because the majority, if not all the deals that they get involved with have a very substantial level of debt, and that's how they can achieve the returns on their investments. And so their return models change substantially when the cost of debt increases at the level they have. And then you combine that with the fact that valuations still look pretty high these days. We're seeing stock markets trading at near all-time highs, if not at all-time highs. And then you look at that alongside, the potential talk of the market pulling back, whether it's the second half of next year, mild recession, soft landing, those kind of things. So there's just uncertainty on the horizon. And so I think in the private equity community, things have maybe taken, I wouldn't say necessarily a pause, but slowed down, maybe a little more time, being a little more patient, being a little more selective, going after certain opportunities, maybe eliminating certain industries, that they may view as being somewhat of a challenge in the current environment. So those type of things. But by and large, I think it's been better than most people were expecting. And if we can get any rate relief coming in, I think the earliest I've been hearing from some economists are that, May be the first time the Fed starts pulling back on rates, but certainly the second half of this year and potentially leading into 2025. And that's going to, I think, be a big impetus for a lot of deals that are maybe just sputtering along to come back online.
Yeah. Okay. Well, cool. I appreciate the insight. How can folks get in touch with you, find out more about you, about Prairie?
Yeah, sure. They can reach me at email is rfiore, that's RFIORE at prairiecap.com. That's prairiecap.com. Or on my phone, which is 630-413-5575.
Okay, we'll put that in the show notes, and we'll put your LinkedIn profile in there as well, and then the company website, so folks can track you down. You've done a great job for us, and I appreciate you coming on and helping us understand the ESOP landscape a little bit better
Jim,
today.
this has been awesome. I really appreciate the opportunity. It's been great talking to you. Best of luck to you and your team as you go on your ESOP journey. And we look forward to seeing all your successes in the future as well.
Thanks, Rocky. Okay, until next time, keep it real. Thank you for listening. This podcast was powered by Onan, a family of staffing companies providing real staffing solutions to manufacturing, logistics, and food processing companies across the United States of America. To get in touch or learn more about partnering with an Onan Group company, visit us at www.onangroup.com. Thanks for tuning in. Until next time.